What's up, guys? It's December 16th, 2024. I have a couple weeks left in the markets, and then it's 2025. So that's pretty cool. We had a sideways day in the market, but there's always money to be made. Daily chart, 15-minute chart. That is the contract rollover gap up. Just ignore that. Oh, actually, I don't know why I was trying to hide that. Anyway, just ignore that. Here we are today. So this is that. Bulls have a strong pull, and now we're consolidating. We're becoming breakout mode. Bears are getting lower highs. Bulls are going side, or I guess the market's going sideways at lows. So it's somewhat creating a triangle. We have 1, 2, 3, 4. One push down and a breakout. Either way, we don't really know. This is the third flags, and generally third flags reverse in a trading range. But are we in a trading range? Because we're consolidating at new highs. So that's interesting. That's the breakout point. We broke out above that, and now we're going sideways on that. So 15-minute chart shows the same picture, but we can get a better angle. Leg one, pull back, leg two, pull back, leg three, pull back, leg four, double top, leg one, pull back, leg two. I like to look at the markets from leg one, leg two perspective, or even though I say leg one, it's just really, is this going to get a second piece? So is this price action here strong enough to get a second piece? Yeah, it's strong enough to get a second piece. And this second piece, the second piece in this leg got three pieces up. Leg one, pull back, leg one, opposite bar, pull back, leg two, opposite bar. That's not an opposite bar, it's a range bar, it's a doji, bringing the trend line, bringing this candle as low. Leg one, pull back, leg two, pull back, leg three. So I think it's extremely important to look at the markets from a consistent perspective. The price action is fractal, so however you decide to look at it, if it's a true way of looking at it, you should be able to look at it across all time frames, not just the time frame you're looking at. So that's something to think about if you guys are doing your own breakdowns and whatnot. Are you consistently marking up the charts from the same perspective? You go back in time to any video and you can see the progression of how I've gotten to leg one, leg twos. That's because, so do these four bars get a second piece? They do. 24, 25. Does 24, 25 get a second piece? It does. 27. Just because it gets a second piece doesn't mean you have to trade it. Leg one, pull back, leg two, pull back, leg three, wedge bottom. I prefer to trade bars like 32. So bar 27, traders who bought that made 1R on the high tail of 30. Huh. That's weird. I was looking at it. Yeah, so they made 1R to the tick and it reverses lower. Traders take profits at 1R. So they took profits and now they're going to go for a second leg. Bar 32 was a 50% pullback. I think that's a good buy. And that also led to a trend. But that being said, you could buy this and get trapped because it looks like 31 is strong enough for a second piece. It never got its second piece. You could say 35 was that attempt. Double top, tight trading range since bar 14. Or excuse me, tight trading range since bar 13. 13, 14. So you could say there's so many ways to look at it. Leg one, pull back, leg two, pull back, leg three. 32 becomes a wedge bottom, higher low. Breakout mode. Like I was talking about on the daily chart, price action is fractal. So the way I read the daily chart is the way I'm going to read this. That was just an example. We're going to start from bar one. Bar one, big gap up. Big gap up. Bar one is a trading range bar. It's a doji with a bear body. Bar two looks like, well, it's a bull bar with a range body. It's a range bar with a bull body. Bar three has more tail than body, so that also means it's a range bar. Bar four has more tail than body, so that means it's a range bar. First four bars of the day are range bound price action bars. So that should tell you something about the day. That's not necessarily your trending market. And then we look at 4, 5, 6, 7. Leg one, pull back, leg two. Second leg trap at highs, gets a deep pullback, leg one, pull back, leg two. Here's a trend line break. Here's a trend line break on a smaller time frame. That's fractal price action. Leg one, pull back, leg two, pull back, leg three. Another trend line break, leg four. Bears are going for a reversal and they want to close the gap. However, it creates a double bottom. More traders were inclined to buy bar 11 than sell it. and that led to this. So they saw this as a double bottom. They see this as the range highs, and what happens in range bound price action? We get vacuums. 12 pull back 13. We vacuum to a new high, and then we go sideways for about an hour. The range looks like it starts right here, but bar 13 was part of the range. So 13 to about 42, the market was sideways. Very tough day. Leg one, pull back leg two, and then we just go sideways again, and then a quick breakout. So hard day. A lot of you'd have to in range bound price action. It's customary to scalp. I don't know if I use those words right. It's normal to scalp in range bound price action, buy low, sell high. Bears are making money today. If you short the new highs, you can scalp out at the EMA, but you would have to be willing to average in. To me, I think it's better to just buy bear bars or buy bull bars close to the EMA. Anyways, 12, 13, vacuum up into bar 7's high, goes for a breakout, goes more sideways. Leg one, pull back leg two, pull back leg three, 27, 28 is a good buy. It's a strong bar. It sells off and reverses on its high. 30, 29, 30, three bear bar, excuse me, 3 bull bars in a row. 31 being that pullback, and then I think these 3 bars are strong to get its second leg. We're in a bull regime. We're trading above the higher time frame EMA. All bars are above the EMA, so 2 more reasons that I think it's better to buy. And you can look for a second leg here, leg 1, pullback leg 2, 35 being a 3 bars gets a shallow pullback leg 3, leg 1, pullback leg 2, pullback leg 3, 39, 40, 42, 39, 40, 41. There's a bear leg. The bear bar is hidden. The bear bar is this tail on 39. So let me zoom in a little bit. There are 3 bear bars here, but you can't see it because 39 printed a bull bar. But if we go to the 1 minute time frame and analyze this micro channel, I really prefer 2 minute. There's your 3 legs lower. There's your vacuum test. Leg 1, pull back leg 2, pull back leg 3. It's the 1 minute time frame. And that creates a bull flag. We are getting a trend line break here, and trend line breaks are bull flag on smaller time frames, and that's what we just witnessed. So bear channel, weak bear channel because it starts with a bull bar, and look at the bear body close on 41. I think this is a good buy. You sit through a small drawdown, and you have to scalp out pretty quickly. If we're counting opposite bars, leg 1, pull back, leg 2, pull back, leg 3. 45 is not an inside bar. It breaks 44's low. So you could say leg 1, pull back, leg 2, pull back. Never really gets its third leg to around here, but for a third leg to count, it should go at least 1 to 2 ticks above 49. And it looks like, let's see something here. It went right to 49. 69 went to 49. So literally the minimum was needed was to get back here, and they did that with 69. Look how long this pullback was just for a couple points. That's just, so think about that. Is this a strong bull trend? Is this a small pullback trend? If it's taking 48 through, that's almost 2 hours, right? 20 bars, 12, like a little bit more than an hour and a half to get not even 1 tick above. So the bull trend is not that strong. 8, 9, 10, 11's tail is not good for a bull trend, and bears might be coming back to collect. Trap bears. What do I mean coming back to collect? Well, I'm trying to hint at this leg here. At the end of the day, it sold off to the higher time frame EMA and bounced. Leg 1, pull back, leg 2, pull back, leg 3. Look at the bear channel, 69, 70, 71. Bears that shorted 69 made 1R very quickly, so they're going to take profits at 1R, which is the low of 71. That creates a bull bar, take profit bar 72, testing the breakout point 69, and more. There are more sellers at this tight trading range. There are more sellers at the high than buyers. We're in a tight trading range, just buy low, sell high, or if you're a breakout trader, you could do nothing. So you get filled on 72 with a limit order, and it sells off, creating a 1, 2, 3, 4, 5 bar market channel. First pull back, first opposite bar gets a reversal, bar 78, excuse me, gets a sell, which, so 78 is, okay, I said this wrong. We have a 5 bar micro channel, so the first opposite bar is going to be a sell. So this is that reversal I just mentioned, 78, 79, 80, 81. I think today was a difficult day because let's actually look at how much of a breakout. So we have one trading range here. Okay. We have one trading range here. There's really no... We can pull this across here. So this gets the breakout, right? And then we have another swing low. Let's see. Just make it orange for whatever. So look at that. Most of the day was in a trading range. We can put that to like right here. We'll do a little bit of overlap. So for the... Even this was in the trading range. We just didn't know it. So you have these bars are the bars have a lot of overlap, and those bars are the breakout bars ish kind of, because then when we sell 74, 75, 76, that gives it a better trading range appearance. So definitely a hard day. I think buying the EMA was the safe bet, or buying bars like 32, buying bars like 41 and scalping out, buying the low of 45 and scalping out 3 bars later. 46, 47, 48, I think is strong enough to get its own second leg. But how high are we in the trading range? Let's see. Leg 1, deep pullback. Leg 2, new high, deep pullback. Leg 3, deep pullback. So it's a hard buy. If you're looking to buy 48, 49, you have to scalp out. And that's okay because trading range characteristics is telling us to scalp out. It's buy low, sell high, and scalp. So let's look at all the trades we could have taken today from a micro channel perspective, because that's how I like to... When I trade, I wait for a micro channel to be put in. Then I wait to see, then I want to see the strength of that micro channel, and then I look at the strength of the pullback, and then that's when I take my trade, and that creates the leg 1, leg 2 angles that I like to trade. Leg 2s are the highest probable trade because there are 3 types of traders that are trapped into a bad trade. So limit order bears that short the hot, have limit order set right here. They're trapped into a bad trade. Then you got traders who front run the breakout that buy bar 11. And then you got who want to press their position. So now bears need to buy. Traders want to press their position. And then you have traders like myself who are waiting for the context. That makes 3 types of traders who all want to buy looking at the same leg. So that's why I trade it, because there are 3 types of traders looking at the same type of... They all have different missions, but the end day is they're all hitting that buy button. Some traders are stuck. Some traders are looking to press. And some traders like myself are looking to get long. Fair warning, I didn't trade today. I'm not gonna be trading most of this week, and then I'll pick it back up next week, I think. Just like kind of take 2 weeks off and digesting some of the price action I've been studying, and it's been going well, honestly. I don't like taking 2 weeks off, but I think it's a necessary evil. That makes sense because, well, that's the way I said it. So hopefully it makes sense. It would be great to see a measured move of this. That is a lot to ask for. Put it at the pullback, and it doesn't get met. So, however, we can use these 3 bars for context. 11, 12, 13, 14 are still... It's 4 bar micro channel, and we can use that for context. I think this is a good trade. Wait for the pullback here. And 1-to-1's met, 1.5 R is met on bar 47. We have another 3 bars that are here, 32, 33, 34. Put it at the high of the pullback, or put it at the low of the pullback, depending where you get long, maybe 36. 1.5 bars also met. We have another 3 bars, but remember that whenever we're counting this, we have to... The later the leg, any leg past 2, the probabilities go down for continuation. So if you're assessing the strength, remember, the more legs we have, the less of a chance it has of continuation. We already have 3 trades in. If you caught this leg, that's a trade here, second leg trap. So there's multiple bull legs in a row, and we're in chain range. 3 bars here. You're going to take that. You definitely got to scalp out. 1-to-1 was met fast. And I put that below the bar 45 because you'd buy the first pullback after a breakout. We actually don't know that's a breakout when the market's going on like this. So this is what you would be buying. You'd be buying this triangle. You'd be buying bar 45 is this bar. and you're looking for that breakout. You're looking for a continuation 1, 2, 3, these 3 bars, 44, 43, 42. And you get that with these 3 bars, and then you do it again. Okay, I hit my target. Let me see if these 3 bars should get a continuation. We have a gap. We have 2 strong bars closing on their highs, and we have follow through. We have 3 bull bars. I talk about that a lot. The best type of gaps have 3 bars in a row. But then, what did I just say? The later the leg, the more of a chances of it being like not necessarily a reversal, but getting a deeper pullback. And that's what we get, a very deep, long pullback before they even get a double top 67, 68. 68, 69, 70, 71, three bear bars into the EMA. I think it's a hard short because you're shorting into support. Then we see 72, 73, and 74, 75, and you can start to think the market's breaking out. All bars are closing on its low. We're in a tight trading range, and what's the market cycle? The market cycle is breakout, first opposite bar equals channel, and then we go range bound. So we have the breakout here that we talked about. The breakout here, leg 1, opposite bar, pullback, leg 2, pullback, leg 3, so channel, range, and then we start to get breakouts. So you could say this is a breakout, but we're not breaking out of much. Then we get 73, 74, 75, and that's a breakout. You could short for a scalp here. We get that first opposite bar 78, and that puts the market into a channel phase. And then we go range bound. But what is this leg breaking out of? It's not breaking out of the daily range because bar 11 is low here. So we have to be cognizant of what this is testing and where we are in the market cycle, and then use that to determine what type of leg we're going to take and if that should get its own second leg. Hope you guys are doing good. It's 2 weeks left. Drop some questions. I'm going to drop a little video this weekend about how I trade from a systematic perspective and why I think it's the fastest way to become a discretionary price action trader. So stay on the lookout for that. Should be done. I'm working on the video right now. It should be done by Saturday. Be posted sometime. You guys have a good one. If you learned something, share the show. I didn't go over gaps, but I know you guys are privy to gaps now. Here are the gaps. 1, gap 2. These. And what gaps show us trap traders. So we know if we have gaps, traders are trapped. If we know gaps are closing, we know we're range bound price action. This gap stayed open for a lot of the day, so think about that if you were looking for shorts. If you think the market is range bound, so if you're a bear and you think the market's range bound, targeting the low gaps is a good target. If you're a bull and you think the market's trending, you want gaps to stay open. And generally they'll get 1 or 2 tests, but you don't really want them to be pierced. Like this gap got pierced a lot. If we were right here and just took off, that would be great for the bulls, but it didn't. The market was more range bound. So yeah, I hope you guys learned something. If you learned something, share the show. Hope you have a good one. Merry Christmas, everyone. Next week is Christmas. 9 days left till Christmas. So yeah, you guys have a good one. I'll talk to you later. Merry Christmas, everyone.